Hello folks, hope you're doing well. So today I wanted to make a video about a topic I've been studying recently. It is something that I think is pretty controversial in regards to how I'm viewing markets and understanding the auctioning process of markets. So let's get to it right here. It's called a single print. And honestly, if you look up what is a single print, you're not going to find too much on the internet. And that's why it's kind of interesting. So if you look it up, Google gives you this first thing that shows up, which is on mypivots.com. And it says exactly this. A single print is when a single letter is printed on a market profile graphic. So generally what it represents is a price that was essentially skipped in the auctioning process. It generally happens when price moves very quickly through a certain level and it leaves what is called a single print. Now, a single print will not be confirmed until the price has stayed away from it a long enough period of time that you can actually say that that was a confirmed single print and that price traded at that moment and then it never traded again for the entire remainder of the session, for example. Just a disclaimer, I'm not an expert on this topic as I've been only studying it for about a week and a half at this point. So if you have anything to add, please leave it in the comment section below. Although it's something that is standing out to me right now as something being very interesting in regards to market profile, volume profile analysis of the auctioning of markets. So let's keep going here. Which single print? Let's read this. When the market breaks away, it will leave a series of single prints. The single print that we are interested in is the first one created when the market breaks away. This will be the lowest price with a single print when the market rallies and the highest price when the market breaks down. Now, I'm not sure if that's 100% true, but that's generally what this website is saying. So let's go and find a practical example of a single print, and I'm going to show you how I've been looking for these types of prints lately. Now, generally, when we're looking at session volume or market profile type of ideas, you're looking at this type of chart generally. Okay, so you can find a single print on a 30-minute time frame, but if you really want to zoom in exactly on the price, you might have to zoom in on a shorter time frame to find out exactly where these single prints are occurring. So let's take yesterday for example. So yesterday was Monday, August 24th. So what happens is the market is sort of rallying here and we're pretty much in blue sky breakout. The Nasdaq is trading at all-time highs at this point. Now, that is not the most relevant thing, but what is relevant is when we start to see single prints appearing in the price action. So again, I'll say a single print is generally, in the case of a bull trend like this, it's going to be something like this where the price breaks out above this point right here and then doesn't come back to trade there ever again, and it leaves what is called a single print. So you can see here on the volume profile that that area right there barely traded any volume because essentially the price just moved straight up from there and there was a gap in the liquidity at this price. And that's why this price is significant. So it's around 634, 635 approximately on NASDAQ NQ. All right, now if you keep looking here, you're going to see another little single print right here on this 2-minute chart. Another sort of gap in the liquidity as we moved higher. Now, these were only confirmed single prints when the market continued to trend higher and started spending a lot more time above these trading ranges. All right, so this was a pre-market session. These two levels were important to watch going into the market open session. Generally speaking, when a single print has been confirmed, it generally signifies a shift in a supply or demand zone of the market. So when we see a single print like this on the bull side, it is generally signaling that we're seeing a new demand zone starting to accumulate at higher prices, right? Because the market is trading higher prices, we're seeing gaps in the liquidity, and we're spending a lot of time at higher prices. So on trend days, for example, we're going to see a lot of these single prints starting to form. If we're seeing a lot of single prints forming and the market is not confirming any counter trend bias, then there's no reason that you should trade against that trend, especially if we're seeing single prints forming. Now, the thing about single prints is that they tend to get tested. A lot of them get tested in general. So you might see sometimes where the price shoots up and then it gets tested. So what we're going to see here is as the market opens, you're going to see like in this case right here, the market did trade higher, but as we created this sort of print right here, we did in fact come down to test it. So you're going to see that the majority of these prints are getting tested, and that's why when they don't get tested, it becomes a significant price, because that price signified a gap in the liquidity. I know I keep saying this. So what happens is, as the market opens, we sell off, and these prices get tested. All right, fine. So again, marking it in, it's around that 635 to 641 zone. Now, What is really interesting is how the market developed afterwards. So if we look at how this price action developed, you can clearly see that later in the day, and again, I didn't move these lines, I just put them in exactly where those single prints were. The market found resistance in that zone. The profile of this market developed in a way where after the sell-off occurred, the 635 to 640 zone was acting as a general resistance zone, an area of supply. Those single prints in the morning contributed to the fact of this price being significant. And again, the only reason I put those prices down was because of the fact that there was a gap in the liquidity at those prices. So that's all I'm going to say regarding single prints today. And you can see how it acted as resistance, and then later on we managed to trade higher. And then that was pretty much it for that session. And I just thought it was interesting how it acted as a general resistance point in the later part of the session. And that was pretty much where we topped and couldn't really trade above until we saw the overnight trading, and then we sort of started to consolidate above that level. So let's keep going here. Now if I remove all these lines here, let's say new session now, new session. So new session started right here, 6 p.m. August 24th. You're going to see right away here a bull single print formed right here at about 660. All right, so let's keep going here, and another one right there, another one right here, let's say around 670. So let's mark that in, 660 and 670, bull single prints on this short-term time frame. Now I want you to look at how the market consolidated after this bullish move. You can see here that we sort of started to develop this trading range, and now look at how the price is just consolidating here, holding above this general 670 area, and that just happened to be where there was a gap in the price, a gap in the liquidity right here. We traded straight through this, and then that is where the price found support. That is simply why these market generated signals, it's market generated information, essentially, there's no other way you can say it, they are acting as significant prices a lot of the time. So that is something that I am definitely paying attention to a lot more now when I look at price charts. I just thought I would pass it on to you because I know that the majority of retail traders are now looking at this. They would prefer to look at Bollinger Bands and RSI. So all the best to you today, guys. All right, guys, so I hope you enjoyed the video. I'll see you in the next one, and take care. Goodbye.